Hello and welcome back to Principles of Accounting 2. I am still your host, Dr. B. Appreciate all of you being here tonight, here in the spring 2023 semester. It is an absolute honor and a pleasure to have all of you with me tonight as we talk about managerial accounting, which is what Principles of Accounting 2 is all about. As managers, it's our duty to analyze the financial performance of the business, make decisions, and take action on behalf of our stakeholders. And that is what managerial accounting is all about. I want you to get into a mindset here. I want you to think about how you would run your business as a manager, as an owner. I want you to think about cost. How do you manage those costs? I want you to think about the revenue. How do you manage the revenue? How do you manage the costs? How do you explain your business and the way that it functions? These are things we talk about in managerial accounting. And that is the type of mindset I want you to have throughout the next 15 weeks of this course. Let's talk about it. I want to talk about the difference between managerial and financial accounting, Principles 1, Principles 2. I want you to think about costs. How do we categorize costs, classify them? And I really want you to try to get you into the mindset of a manufacturing business. Make products that we sell to our customers. That's a manufacturer. It's important to think like a manufacturer throughout this class because we're going to be talking a lot about cost and how we manage different kinds of cost. So get into that mindset. First, let's talk about the difference between managerial accounting and financial accounting. Managerial accounting, which is what this course is all about, we look at financial and non-financial information for managers to help you as a manager or an owner to make decisions for the company. As a manager, it's important that you take the financial and non-financial information to plan for the business, to control the business, to monitor the financial performance, and then to take corrective action through feedback. Planning can involve something like creating a new product, expanding into a new market, building a new factory, buying new equipment, etc. We plan for investing into the business through property, plant, and equipment, research and development, etc. That's all a part of planning. We implement our plans. We execute them. We monitor the execution of our plans. And then we control output. We look at our costs. Are they too high? Or are we being profitable? Are our customers satisfied? These are all parts of control, yeah? And then we take the feedback and continue to improve the plan, continue to improve the execution, and so forth and so on. This is the managerial cycle. And managerial accounting helps to drive the cycle. In Principles of Accounting 1, through the concept of learning about financial accounting. Okay? We talked about the income statement, balance sheet, statement of cash flows, statement of retained earnings. We talked about all of the external stakeholders, how to develop those financial statements, etc. And we focus on the whole organization. We looked at previous financial information, etc. That's financial accounting. That is what you learned when you took Principles of Accounting 1. And Principles of Accounting 2, which is managerial accounting, we're going to be looking inside the business, beyond the financial statements of balance sheet, income statement, statement of cash flow, statement of retained earnings. We're going to look beyond that stuff. We're going to look at things like budgeting. We're going to look at things like manufacturing costs. We're going to look at labor as a cost, factory overhead, materials. We're going to look at a lot of processes, procedures. The majority of the stuff that we look at is monetary, but we also look at some non-monetary information as well to help us to make decisions about the business. Everything we do in accounting is governed by ethics. It's very important to be ethical, very important to be honest, transparent, as much as possible anyway, to ensure that we're not committing fraud. Okay? So I just need to tell you that up front. Accounting, we help to protect our assets, make sure that our information is reliable, ethical, we're upholding policies, and we also promote efficient operations. These are the internal controls that we use in managerial accounting to ensure the business overall is ethical and doing its best to prevent fraud. In managerial accounting, there are a lot of different jobs that accountants might have. The CFO, the controller, that used to be me a long time ago. Well, I didn't make that kind of money, but I like to think that I did. Division controllers, general managers, financial analysts, senior accountants, staff accountants, a lot of different accounting jobs, in financial accounting. It's not just accounting that they do. They also help managers and business owners to make decisions. As a manager, it is absolutely critical that you control the costs of your business. And understanding costs is like the most important thing that you as a manager should be doing. There are really two classifications of costs that we can control. And they're based on behavior. They are. We have what's called fixed costs and variable costs. Fixed costs are costs that do not change regardless of the level of activity. Fixed costs are costs that do not change regardless of the level of activity. Examples of this would include things like the supervisor's salary. That's a fixed cost. The supervisor gets paid the same amount for the whole year. It does not change regardless of output. Another example would be rent. Rent's a fixed cost. It does not change with the level of output. Fixed cost might be internet bill. Does not change with the level of output, etc. Right? Costs that do not change regardless of the level of output. What I mean by the level of output is level of activity. the busier you are, the more that you're producing. Yeah? The other category is called variable costs. Variable costs do change with the level of activity. Variable costs include things like hourly direct labor. Employees that are paid hourly, that's a variable cost to the business because the more that they work, the more labor cost the business pays. You see? Electricity is a variable cost. The more electric we use, the higher the electric bill is. Materials. If my job is manufacturing and I am creating cars, I'm a car manufacturer, the more metal, the more rubber, the more plastic components I'm using, the higher my materials costs are going to be. This kind of shows you examples of fixed costs and variable costs. Fixed costs do not change regardless of the level of output. Variable costs do. As always, if you have questions about anything that we're covering today, please feel free to unmute your mic and ask your question. For those fixed and variable costs, there are two additional classifications you need to understand. We have what's called direct costs and indirect costs. Direct costs are costs that I can directly trace to an activity. Here's what I mean by this. Think of labor. On an assembly line, I have hourly employees that build the car on the assembly line. They are physically touching the product, the car, as it's being manufactured. They're on the assembly line. They're screwing in the light bulbs. They're putting together the electric frame. They're building the car. Okay? They're shaping the metal. They're putting the tires on, etc. They're physically working to build the product, the car. Okay? We call that direct labor because they are directly involved in the manufacturing process. Okay? Direct labor is an example of a direct cost. Another example of a direct cost is direct materials. Direct materials make up the majority of the cost of the materials used to create the product, in this case a car. That would be the cost of metal, aluminum, plastic, rubber, etc. Those materials costs are called direct costs because they help to make the majority of the cost of manufacturing the product. Those are direct costs. Direct costs, we can trace them to the process. We also have what's called indirect costs. Indirect costs are costs that I cannot directly trace to the manufacturing of a product. Okay? This would include things like the supervisor's salary. indirect cost. While yes, the supervisor oversees the employees on the assembly line, the supervisor does not directly get involved in the manufacturing process. Other example would be the maintenance employees that clean the assembly line. They are not involved in the manufacturing process. They're responsible for cleaning the shop floor. Indirect cost. Okay. The human resources department, indirect cost. They are not involved in making the product. They are involved in helping the employees. Indirect cost. The accounting department is an indirect cost. The general sales employees are indirect cost, etc. Cannot directly trace them in manufacturing of a product. A couple more types of costs you need to know about are called product and period costs. A product cost is the cost of manufacturing a product. What goes into making a product? We have direct labor. These are the employees working directly on the assembly line to manufacture the car, the product. You got direct materials. This is the metal, the aluminum, the plastic, the rubber that goes into making the majority of the cost of the car, the product. And this last one's called manufacturing overhead. Manufacturing overhead includes pretty much all of the other things that go into making the product. For example, the smaller indirect materials are part of manufacturing overhead. The electricity used for the assembly line, manufacturing overhead. The depreciation expense for the machinery on the assembly line, that's manufacturing overhead, etc. Manufacturing overhead is kind of like everything else, yeah? Let's get us all lumped together in the manufacturing overhead. It's all the indirect stuff. So direct materials, direct labor, and manufacturing overhead go into the total product cost. So that's why you ever wonder, man, how did they come up with this sales price? Well, the first thing you need to think about is how much did it cost to make this product? Taking direct materials, direct labor, factory overhead, you can figure it out, how much it costs to make something. We're going to hear me talk about these three components for a very long time, so please get used to them. So those are product costs. Period costs are costs that are not directly traced to the product or directly attached to the product. These are expenses not attached to the product. We call these selling and administrative costs. Selling costs involve things like delivering the product to the customer, the sales commissions. Yeah, those are sales costs. Administrative costs are support staff, administrative staff functions, the office staff functions, administrative. Selling and administrative expenses are called period costs. They simply go on the income statement as an expense. That's all. There's a nice graphical representation of it. For the year of 2019, I can show you all of my costs. It's a period cost. we call those operating expenses on the income statement. Yeah, they just go on there as selling administrative expenses. For the product, it's my direct materials, direct labor, factory overhead to create the total cost of the product. If I sold that product within the year, it became cost of goods sold. Cost of goods sold is on the income statement. It represents the total cost of the product that I sold. Yeah, straightforward. If I did not sell the inventory during that year, and I'm going to sell it next year, hopefully, it goes on my inventory. This is on my balance sheet. Now, there are 3 categories of inventory that I need you to understand. We have what's called raw materials inventory, work in process inventory, and finished goods inventory. Raw materials inventory, those are the raw materials. I have not yet used them in the manufacturing process. They're raw. Okay. Example would be, let's say we have a car assembly line. Before materials make it onto the assembly line, they're sitting out in what we call a yard. Y-A-R-D, yard. Materials are sitting out in the yard. I got pieces of raw steel, raw aluminum, raw plastic, raw rubber. Raw materials. Yeah. Have not yet processed them. Have not yet used them. Have not yet touched them. It's called raw materials. Now, as we start making the cars, I'm going to take those raw materials, I'm going to put them on the assembly line. When I do that, what I'm doing is I'm taking them out of raw materials and putting them into what we call work in process. Work in process. Work in process inventory represents the use of the steel, aluminum, rubber, plastic to build the car on the assembly line. I'm currently using those raw materials to build the car. I'm working on them. We call it work in process. I'm building the car. Not yet done with it. I just started it. Not yet done. I'm using those raw materials to build the car. Work in process. Then at the end of the assembly line, when the car is done, we built it. It looks great. We want to sell that to our customer. We roll it off of the assembly line. The car becomes what we call finished goods inventory. Finished goods means the product is ready and available for sale. Rolled the car off my assembly line. I put it out into the parking lot. Okay, and I put a sign on it. It says for sale. Yeah. Those are the 3 types of inventory. Raw materials, work in process, finished goods. If I sell the inventory 2020, it then becomes cost of goods sold for 2020. You see? I want you to think about the physical flow. Go from the assembly line, think about the physical flow of materials. Think about the physical flow of the employees. Okay? Track all of our costs, thinking about the physical flow. Okay? Here we have an example of a bicycle company. And this chart helps us to classify costs, whether it's fixed or variable, direct or indirect, product or period. Remember, fixed means cost does not change regardless of output. Variable means it the cost changes depending on the output. Direct means it makes up the majority of the product. I can apply it directly to the product. Indirect means I cannot directly trace it to the product. The product cost, if I could trace the cost to the product, and period, if it's an expense, selling administrative expense. So here we see this chart. Bicycle tires and wheels. It's a variable cost. Cost goes up or down depending on the number of tires and wheels I use. The direct cost, it's a part of the product. So therefore it's a product cost. The hourly employees that are building the bicycles, it's a variable cost, it's direct, and it's a product cost. Advertising. This is a fixed cost. It doesn't matter how many bicycles I make. If I pay a television advertisement of $500,000, it doesn't matter how many bicycles I make. It's a fixed cost. It's an indirect cost because I cannot trace that TV ad directly to the number of bicycles that I sold. And it's a period cost because I cannot directly trace it to the product. Yeah. Supervisor's salary, fixed cost. It's indirect and it's a product cost. It falls under factory overhead. Office depreciation. It's fixed, indirect, it's a period cost. The word office. Yep, office. Factory depreciation. It's a fixed cost, indirect, and it's a product cost. It goes into factory overhead. Et cetera, et cetera. Yep. Costs don't just apply to manufacturers. They also apply to service companies and to retailers. They're applicable to every company, really. Here we have an example of an airline. The airline serves beverages to customers. It's a variable cost because it depends on the number of passengers on the plane. Yep. Just an example. Here's a quick summary of typical manufacturing costs for a company. 45% of all costs are materials. 40% is factory overhead, and only 15% is direct labor. Direct materials, as I mentioned earlier, the cost of those materials used to make up the majority of the cost of making the product. For a car, it's the steel, the aluminum, the rubber, the plastic, etc. For a bicycle, it's the frame, the steel to build the frame, etc. Direct materials. I can directly trace it to the manufacturing process. Finished good. Direct labor. These are the employees working on making the car on the assembly line. They're directly involved in the manufacturing process to make a finished good. And factory overhead. This part gets a little confusing. Factory overhead are all of the manufacturing costs that we cannot directly trace to a single finished good. These are all your indirect costs. Indirect labor, indirect materials, utilities, supervisors' costs, etc. Here's some more cost classifications. We have what's called prime costs and conversion costs. The word prime time. Okay, prime time. Prime costs are costs make up the majority of a product. Prime costs are costs that make up a majority of a product. This would be direct materials and direct labor. Conversion costs are costs that I can convert to be added to the cost of making a product. We'll talk more about this. Non-manufacturing costs include things like accounting office, expenses that are classified as period costs, selling administrative expenses, and these non-manufacturing costs are not a part of factory overhead because they are not incurred in the manufacturing process. As you know, all businesses have an income statement, a balance sheet, statement of cash flows, and a statement of retained earnings. These financial statements are different based on the type of business. That makes sense because they do different things. A merchandiser buys and sells finished goods. They buy them from a supplier and then they sell them. Think of like Macy's. You go to Macy's, you buy some clothing. That clothing wasn't made by Macy's. They bought it from someone else. Okay, they're a retailer. That's what retailers do. Merchandiser, retailer, same thing. So Macy's went and bought the clothing from someone else, and then they're selling it to you. Yeah, buy and sell finished goods. Manufacturing, they're making the finished goods to sell. Okay, so they buy raw materials to produce and then sell the finished good. In a service business, it's even more different. But in manufacturing, as I explained earlier, there's 3 different types of inventory on their balance sheet. There's raw materials, work in process, and finished goods. Raw materials have not yet been processed. They're waiting. They're in the yard. Work in process, partially completed units. These are the cars on the assembly line that are in the process of being built. And then finished goods, those are the finished products that are available for sale. Those are the cars that are totally done and they're sitting in the parking lot ready to be sold. If I can compare the businesses. On the far left, we have a service provider. They provide a service to their customers. In the middle, we have a merchandiser, a retailer, Macy's. They have what's called merchandise inventory on their current assets. On the far right, we have a manufacturer. They have raw materials, work in process, and finished goods inventories of their current assets. The primary difference between the 3 different types of businesses is inventory. Obviously, there's no inventory for a service provider because they don't they don't sell inventory, they provide a service. Yeah. Principles of Accounting 1, you learned how to compute cost of goods sold. We're going to go a little bit deeper than that, and I'm going to show you the difference between a retailer and a manufacturer. Retail cost of goods sold starts with the beginning inventory plus cost of goods purchased, minus ending inventory gives you cost of goods sold. In manufacturing, we take the beginning finished goods inventory plus the cost of goods manufactured. That's your direct materials, direct labor, factory overhead, minus your ending finished goods inventory. Gives you cost of goods sold. Here's what it looks like from income statement perspective. Your cost of goods sold for a merchandiser, beginning merchandise plus cost of merchandise purchased equals merchandise available for sale minus ending merchandise equals cost of goods sold. For manufacturing, it's beginning finished goods inventory plus cost of goods manufactured equals goods available for sale minus ending inventory equals cost of goods sold. So they're slightly different. Earlier I had mentioned it's important to follow the physical flow. Following the physical flow of the way things are manufactured helps us to better understand the manufacturing costs. Everything starts out as raw materials. We can't create an iPhone from the air. Okay? We need plastic. We need components. We need conductors. We need batteries. We need all of the electronic components. Yep. The same is said with anything else. A car, for example, starts with raw materials. Raw materials includes beginning balance of raw materials plus the purchase of any additional raw materials. I pull raw materials into work in process. Yeah? I start with whatever I already had in work in process. Then I add in my direct materials used. Plus, I add in the cost of labor. And plus, I add in the cost of factory overhead used. Direct materials plus direct labor plus factory overhead equals the cost of goods manufactured. And eventually I sell the inventory. Yeah? And it just shows you the physical flow. Remember that physical flow, really important. In manufacturing, as a manager, it's really important that you understand your costs and the cost of goods manufactured. This shows us how much money we spent to manufacture products. Take direct materials used plus direct labor plus factory overhead equals the total manufacturing cost. Plus beginning work in process minus ending work in process equals the cost of goods manufactured. Very straightforward formula. As long as you remember this, you'll be all right when it comes to calculating cost of goods manufactured, which, by the way, I'm sure will probably show up on the homework assignment or quiz. As I had mentioned, when we talked about the differences between financial accounting, principles of accounting 1, and managerial accounting, principles of accounting 2, we look at information differently. Because in managerial accounting, I look at the different reports, yeah? To help me to make decisions, help me run the business. One of those is called the Schedule of the Cost of Goods Manufactured. And the Schedule of Cost of Goods Manufactured, it itemizes all of my direct materials used, my direct labor used, and all of my factory overhead. Then I take my, and I can walk through the cost of goods manufactured formula. Total direct materials plus direct labor plus total factory overhead equals total manufacturing costs plus work in process inventory equals the total cost of work in process minus ending work in process inventory equals the cost of goods manufactured. This report's really helpful for me as a manager to be able to make better decisions. So total direct materials plus total direct labor plus total factory overhead equals total manufacturing costs plus work in process inventory equals total cost work in process minus ending work in process inventory equals total cost of goods manufactured. Very important formula to know, especially for this course. Here we can see the relationship of the total cost of goods manufactured as it flows onto the income statement, which ultimately translates to the balance sheet in terms of inventory. Managerial accounting. The area of accounting is making really interesting strides. Look at things like customer satisfaction, global economy, thinking about like supply chains, service economy, how businesses are supporting service or services are supporting the business, the value chain proposition, lean accounting practices, and of course, e-commerce. All of these areas are trends identified within managerial accounting that impact the way that we do things, right? And these are really forward-thinking concepts because this is what's ultimately going to drive business forward. Everything evolves around the customer. Look at my customer's experience with my product or my service, and I make improvement around them based off of their feedback, right? And this leads into what we call lean principles of business and, of course, improved e-commerce experience. We look at total quality management as a way for improving quality controls within the business. We focus on higher standards, which drives quality improvement. We look to eliminate waste, look to our employees to try to do methods to improve overall quality. And of course, we look at the company value on quality. Manufacturing is a process developed by the Japanese auto manufacturer Toyota. It's called the just-in-time manufacturing process. And the way this works is Toyota would receive a customer order, would put that customer order into what we call a schedule for production. Based off the schedule of production, the company would order their direct materials, staff their employees for direct labor, and they would get their materials and their labor just in time to assemble the product. Which means that the customer will receive their finished car just in time, right? What this does is it eliminates waste. It eliminates a redundancy in business. That's why you'll notice a big difference between Japanese auto manufacturers and American ones. The Japanese believe in this philosophy, the Americans don't. So if you look at, for example, we compare Toyota to Ford, there are a lot less cars sitting on the Toyota dealership lot than there is a Ford lot. And the reason for that is Ford's what we call a mass producer. They make the same car over and over and over again. So you got hundreds of thousands of them. They just kind of sit there until they're sold. That's a waste. Yeah. You just wasted a lot of resources doing that when you could have just make them as you receive the order. Save you a ton of money. You could apply the same concept to a lot of different industries. Looking at the value chain, for example, the companies constantly look at their processes to increase efficiency and eventually sales and profits. Companies are constantly looking at ways to become lean, reduce waste, be more efficient. And companies are also trying to become more responsible within society, to their employees, and to their suppliers. Instead of focusing solely on the bottom line, they're also considering things like the environmental impacts, social impacts, etc., which ultimately leads to a perception of the business. In accounting, especially as a manager, it's important that we look at a couple of ratios to kind of get a quick concept or snapshot of the business by computing a quick ratio to be able to understand how efficient the company is using its assets. And here we have an example of what we call a raw materials inventory turnover. This is very similar to the inventory turnover ratio that we learned about in Principles of Accounting 1. Obviously, the difference here being raw materials, how well we're using our raw materials. To do this, we take raw materials used divided by the average materials inventory. Now remember, to find an average in accounting, take the beginning balance plus the ending balance divided by 2. That gives us the average. So the average materials inventory is beginning balance plus ending balance divided by 2. That tells us how overall we're utilizing our raw materials inventory. And we do the same thing with days sales for raw materials inventory. We could take ending raw materials inventory divided by raw materials used times 365 days. Tells us how many days our raw materials inventory is sitting there and not being utilized. And that, my friends, is the end of our discussion for today on managerial accounting concepts, which really lays the foundation for this course over the next couple of weeks. Are there any questions, comments, concerns about any of the stuff that we talked about tonight?
For me, just that it was a lot of information.
A lot of information, yes.
But I understand. I make my notes, and I really like it. Thank you.
Awesome. Thank you,
And I'm
Alexander.
excited because I feel like I don't know if it's a quote or phrase that it says it just come into like a ring in my finger, like exactly because I have a meeting tomorrow, and it's gonna be easy for me to explain more.
Oh, cool. Yeah, that's great. Yeah, that's really cool. Yeah, I'm glad that you'll be able to use some of these concepts because they do come in handy, especially when you're talking to other managers about the business overall. Yeah.
Yes, thank you so much.
Hey, it's my pleasure. Awesome, great. Are there any other comments, questions, or concerns? Did we do okay? I know it's a lot of information. It is. There's no doubt about that. There's a couple of areas I just want you to really hone in on throughout all of tonight's conversations. One is the difference between the fixed and variable costs. This is going to show up a lot over the next several weeks, so definitely get yourself familiar with these two. Direct and indirect costs, yes. Direct labor, direct materials, factory overhead. You're going to hear me say that probably every single class from here forward. So definitely get yourself familiar with product costs. Yeah, those are really the primary areas I really want you to understand, because those costs, understanding those costs, are really going to help to drive you forward throughout this course. Okay, so I want to call your attention to the classroom. Talk about a couple things real quick. Number one, that new Futures Scholarship, that's still hanging out here. The due date's March 24th, so if you haven't done it already, consider applying to it. Second thing I want to call your attention to is the module. So module 1, we're in week 2. Yep. Chapter 18. These exercises you're going to find really helpful. Yep. Earlier I had mentioned that accounting is a practice. And the best way to learn anything is by practicing it, right? Absolutely. Practice makes perfect. You remember hearing this. Practice makes perfect. So every week I have these exercises for you. This is not something you have to submit, okay? It's not submitted. It's not graded. It's just there to help you to learn it. Yeah, to help you practice it. So the Chapter 18 exercises, if you click that link, it's going to come up with a couple of Excel documents. This helps you to practice with what you're learning. Okay, schedule cost of goods manufactured. Thinking about the flows, the cost flows, the structures, characteristics. Try these out. It's just there to help you, yeah, to help you become familiar. And to really help you to practice it. Then the other thing is the quiz. The quiz is due Sunday night. Last week, I almost said yesterday. Last week, I had mentioned that all homework assignments and all quizzes, you got 2 attempts. Okay, 2. We'll accept the higher of the 2 attempts into the grade book. So if you do better on your second try, we take the grade from the second try. Each homework assignment and quiz has about 5 questions, a mix of true, false, and multiple choice. Yes, some are math driven. Absolutely, yes. This is accounting. Of course, there's numbers. So, take your time with them. Use the PowerPoints and the lecture and your notes, and definitely read the chapter. Take your notes before you attempt the quiz. I would like you to try to take your first attempt during class time on Thursday, because I think that if you do that, it'll help to get you prepared. Yeah. And I think you'll do pretty well with that approach. So that's due on Sunday night. So yeah, that's all we got for today. If you have any comments, questions, or concerns in the meantime, you can email me, call me, set up office hours, whatever you need. I'm here for you all the time. I'm going to fix that WebEx link. I apologize about that problem earlier. I'll get that squared away tonight. As always, if you have any comments, questions, or concerns, reach out to me. I'm here for you. And with that, I want you to remember to stay safe, wash your hands, do the right things, and I'll see you all again next time. Thank you so much for your time today. I appreciate all of you. Have a wonderful, wonderful, wonderful rest of your night. Thank you so much. Take care. Bye-bye.